In this video, we will be talking about Zomedica stock. The ticker symbol for Zomedica, ZOM. At the current time of this video, Zomedica is priced at $1 per share. The stock has fell 12 cents. It is currently down nearly 11%. Before we continue with this video though, a quick disclaimer. I am not a financial advisor. Always do your own due diligence and research when you invest in any type of market. When you do the homework and you do the research, you will come out winning. Bank on it. Now, let's take a look at this article from the Investor Place. The party's over for Zomedica stock, so stay away. Wow, that's a pretty strong headline, isn't it? Let's get a little more into the details of why this is. Rationality is coming back to the pricing of Zomedica stock. Investors may have been highly bullish on the prospects of Truforma, the company's veterinary diagnostics platform, but trading leaps and bounds above the potential long-term upside from this catalyst, it was inevitable shares were going to pull back in a big way. As I put it previously, buying this wasn't a bet on Truforma. Instead, it was a bet on continued meme stock madness. This recent investing trend hasn't ended just yet. Yet it's clear we likely won't see a full return to the speculative mania last seen in February. Now let's talk a little bit about this meme stock madness. As many of you know, the Reddit squeeze, the whole thing going on with Reddit when it was talking about AMC, GameStop, SNDL, Zomedica, these stocks were all included there. There were big rallies. Let's not get that mistaken. People made lots and lots of money. But we cannot just throw all of these stocks in that meme category because at the end of the day, Zomedica is still a company which has a future that it could be bright because of Truforma. Perhaps we haven't seen the true value yet of what will happen with Truforma, but they are working on that. They are trying to get there. Remember, this stock is not going to just grow all the way and shoot up parabolically overnight. So always keep that in mind. Let's keep going with what they have to say. Earlier this year, investing trends were fully on the side of Zomedica. It didn't matter that valuation was out of whack with its long-term potential. It didn't matter that the company, starved for cash, was dependent on dilutive equity offerings to keep the lights on. To the company's investor fan base, it was the story that Truforma was on the verge of becoming a billion-dollar product that mattered. Yet now, Zom stock has run out of possible buyers. The first movers who hyped it up on Reddit, Wall Streets, and other platforms have cashed out and moved on. Latecomers to the party who bought in near the highs have likely realized their losses and moved on as well. So, all in all, that's basically saying that the real early movers probably cashed out on those who got in, and then those who got in high, they probably weren't patient enough to wait it out and probably ended up taking losses. So if you're involved in Zomedica, you could be in a limbo situation. Of course, this is according to this article. If you believe in that project, stay steady, stay firm. Nobody can tell you what to do with your money. Now, let's see. It has a section here, why shares have more room to fall. Zomedica may have locked down its first Truforma sale last month, but there's a next to zero chance it can quickly grab the level of sales needed to justify its current market capitalization. Yes, you can argue that its still inflated valuation, $947 million, is based on what Truforma sales could be several years down the road. So that was a key part there, several years down the road. This is obviously talking about something that's in the future. So, The question you have to ask yourself: am I investing now for the current time, or am I investing for the future? Until the next time, peace and love to the Tech Lid Legion.